Hello guys, welcome to my YouTube channel. So, on Study with Shams, we'll dive into essential business management and accounting terms, breaking them down into simple, easy to understand explanations. Whether you're a student preparing for exams, a professional looking to brush up on your skills, or just someone curious about the world of business, this channel will provide you with valuable insights and practical knowledge. So let's make learning these subjects straightforward and engaging. What is financial statements? Study with Shams, episode number 1. So what is financial statements? Financial statements is the report card of a business, like how a college student or a school student will have a report card at the end of a semester or at the end of the year, a business will have one too. So this provides a snapshot of its financial performance and position, and it helps the stakeholders to make informed decisions. So this report card of the business can be at the end of a quarter or a year. Now, who are the stakeholders? So the stakeholders are none other than the investors and the managers. Investors, those who invest their money into the business, and managers are those who manage the entire operations. Now, what is income statement? Income statement consists of revenue, expenses, gain or loss, and net income. Now, let's dive into this in depth. So, what is a revenue? So, revenue is nothing but it is the total income generated from the sales of the goods or services provided by the business or the company. Now, what is expenses? Expenses is the expenditure or the spendings of the company. Coming to gain or loss. So, gain or loss is nothing but the revenue minus the expenses, which is where if the revenue is more than the expenses, then it is a profit. If the expenses is more than the revenue, then it is a loss. Net income. So net income helps us understand whether the company is making money, and it helps us understand how efficiently the company is managing its expenses. Next, what is a balance sheet? So a balance sheet is a statement that provides the company's financial position at a specific moment, usually at the end of the year or of a quarter or a year. Now, what is balance sheet? Balance sheet includes assets, liabilities, and equity. Now, what are assets? Assets is something that the company owns. That would be the cash, inventory, equipments, etc. Liabilities. So, liability is something that the company owes to somebody else. That could be in terms of loan or accounts payable. And equity? Equity is the owner's stake in the business. Now, what is balance sheet? So, balance sheet follows the equation which you can see. Assets is equal to liabilities plus equity. And balance sheet helps us understand in very simple words what the company owns versus what the company owes. That is the assets versus the liabilities. Also, it provides an insight into the financial health and solvency. Lastly, we have the cash flow statement. So, what is a cash flow statement? Cash flow statement includes the statement which talks about the operating activities, investing activities, and financing activities. Now, operating activities are those activities which happen on day-to-day basis, and the company earns revenue from this, or it earns the money. That is, example, the cash which is made from the sales. Then we have investing activities. Investing activities is where the company is either buying or it is selling something. So it includes the buying and selling activities. Example, an asset. The company can buy the asset or sell the asset. Next is financing activities. Financing activities includes borrowing or repaying activities. Example, loans. The company can either borrow a loan or it can repay. So this includes all the financial activities that is being done by the company. Now coming to the cash flow statement formula, you can see that the operating activities plus investing activities plus financing activities will give you your cash flow statement. So this statement helps us to understand and see if the company is generating enough cash to cover its operations and investments and financing its growth. Now, why are these financial statements important? Number one, it provides transparency and accountability. It helps the stakeholders assess company's performance and make investment decisions and plan the future. So now you can see that the financial statement includes the income statement, balance sheet, and the cash flow statement. So they are the tools that help you understand the financial health of any business. And by analyzing these statements, you can gain valuable insights into how a company operates and makes informed decisions. So thank you for joining me today. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more educational content. Do you have any questions or want to learn more? Drop a comment below. I would love to hear from you. Until next time, stay curious and keep learning. Subscribe for more content. Thank you.